In our previous video, we discussed about the business model of the banks. How do they get their revenue? What kind of services they provide? What kind of accounts we can open with the banks? These are the important things we discussed in our previous video. In today's video, we are going to discuss about what do you mean by passbook? What do you mean by bank reconciliation? What is the importance of bank reconciliation? These are the three important things we are going to do. Are you ready for that? Hi, my name is Krishna Akamalla. Welcome back to my YouTube channel. Without wasting much time, let us get into the presentation and start discussing about the meaning of passbook. Okay, let us start. Okay, guys. Now, as I said previously, we are going to discuss about passbook. Before getting into that, let me explain how bank will operate our accounts and how we operate bank account. Must understand these two. See, there are two people got involved here. One, our business, and a banker. There are two people involved here. One is our business and other one is the banker. What our business does is they keep transacting with the banker. They keep depositing, withdrawing, giving standard instructions, asking banker to make the payment, asking customers to directly go and deposit into the bank. There are so many transactions keep happening between business and banker, between our business and the banker. So as and when the transactions happens with our bank, what business does is they maintain 3-column cash book. Three-column cash book. In this 3-column cash book, which column they write these transactions? That is important. In 3-column cash book, what they do, in 3-column cash book, what are the three important columns you observe? One is cash column. Sorry, I can say one is discount column. Other one is cash column. The third one is bank column. So this will be in debit side. Similar way, discount, cash, bank. This also will be there in credit side. So these are the three columns we maintain in 3-columnar cash book. Do you agree with me? So whenever business does transactions with a banker, they record those transactions in the bank column. Whatever transactions pertaining to bank will be recorded in bank column. Bank column of what? Bank column of 3-column cash book. Bank column of 3-column cash book. So what business does is they keep interacting with the bank, they keep transacting with the banker, right? As and when the transactions happens with the banker, with their bank, what business does is there will be a separate person, accountant, who will be monitoring these bank transactions, and that person will be recording all these bank transactions in 3-columnar cash book under bank columns. What he is supposed to do? He is supposed to record all those bank transactions in 3-columnar cash book under bank columns. So what business does here? Business maintain bank transactions in 3-columnar cash book under bank columns. Please remember this. You should never forget this. You should clearly remember 3-column cash book under bank column. There are 3 columns in debit, 3 columns in credit. Discount, cash and bank, discount, cash and bank, right? So whenever we have transactions with the banker, those transactions, we in the sense our business, whenever our business has transactions with the banker, what they do, they will record all those transactions in 3 columnar cash book under bank column. I'm repeatedly saying this because this is very important point you need to keep in mind. 3 column cash book under bank column, they record all these transactions. So that is how business will record. Are you clear? Now, what did I say? Business and banker. Now I said in business, it is 3 column cash book. But banker have also need to record, right? Banker also need to record the transactions. Otherwise, how can he remember? He also need to record the transactions. Whatever transactions happening between our business and banker, we are recording in 3 column. That is fine. But banker also need to record, right? Where does banker record? Banker maintains our business account in their books. Banker maintains our business account in their books. Are you getting my point? So they maintain business account, they write debit, credit. Yeah. What our business does? Our business does bank columns, 3 columnar cash book, bank columns. Do you remember when I was explaining about 3 column cash book? Debit side, what we write? We write receipts. What do we write in credit side of the 3 column cash book? Payments. Whatever receipts are going to bank, either we can deposit or we can ask customers to directly deposit. Whenever the deposits are happening to the bank, that means in our account. In the bank, in our account, some deposits are happening. Those deposits are receipts. So those are all to be recorded in receipt side, that is debit. Debit side of the 3 column cash book under bank column, they have to be recorded. Don't forget. So all receipts into the bank, all receipts into the bank to be recorded in debit side of the 3 columnar cash book under bank column. Under bank column. Are you clear so far? Whatever payments you make through bank, whatever payments you make through bank, they have to be recorded in credit side of the 3 columnar cash book under bank column. Credit side of the 3 column cash book under bank column. So this is also very, very important. Debit side we record receipts. Why receipts have to be recorded in debit side? I already explained in 3 columnar cash book. Please go and refer that video. Why receipts are supposed to be debited? That I already explained. So receipts will be debited in 3 column cash book. Similar way, payments will be recorded in credit side of the 3 columnar cash book. Under which column? Bank column. Clear? So this part is clear for you now. When it comes to banker, banker maintains what? Banker maintains our account, business account in their books. Here, debit side, he will write payments. Credit side, he will write receipts. Whatever payments banker is making on behalf of the business, whatever payments banker is making on behalf of business will be recorded in debit side of our account. Debit side of our account. So payments will be debit side. Whatever deposits are being recorded in our banker books, that will be in credit side of our account. So if you see a blind approach, 3 columnar cash book debit side we record receipts. In banker books debit side we record payments. Quite opposite. Here if you write receipts, here you will write payments. Here you write payments, there you will write receipts. This is nonsense. Don't remember like that. Completely nonsense. Okay. I because many people explain in that fashion, which I don't like, but still, if there are some people likes this kind of explanation, so that is the reason for them I explained this. But I don't prefer you to follow this kind of approach at all. That's not my approach. Why payments are in debit side? Question yourself. Why payments are? If banker is making payment on behalf of business, what they will do? They will debit business account and credit their cash account, right? They will debit business account because they are making payment to on behalf of business, right? So our business account has to be debited because they are making payment and my balance has to come down. So that is the reason why payments are coming in debit side. Whenever there is a deposit, that is the amount collected on behalf of, right? So that is the liability for banker. All liabilities are credit balances, so it has to be created in my account in banker books because this is liability for the banker, correct? So they will record in credit side. Simple. There is no complexity here to understand. So this is how you need to understand. Now, what did I say? Business will maintain 3 columnar cash book. Debit side we record receipts, credit side we record payments. Similar way, banker records business accounts. Debit side we record payments and credit side we record receipts. I hope you are clear till this time. Now, this business account is nothing but your passbook. Whatever banker is maintaining the business account, the reflection of the business account is nothing but your passbook. The reflection of the business account in banker books, the reflection of our business account in banker books is nothing but your passbook. Again, I am repeating. The reflection of the business account in banker books is nothing but a passbook. Is nothing but a passbook. Previously, these passbooks used to be, they used to give a book. Even now they give book. You go to bank. Previously, how we used to do, we go to bank every week or every alternative day. We give that passbook to the cashier there or accountant in bank. They will take our passbook, put it in printer, they will print and give it to us. So whatever transactions happened during that week or month, that will be printed on your passbook. Then once you go to your office, your business, you can go through the passbook and see whether you updated all those transactions in your books of accounts they used to check. Even now, passbook is being updated. There are missions available now, like our ATM missions. There are missions available where you can go and give your account number and insert the passbook. Mission will automatically print and give you that passbook update. That is one option. Second option, majority of the banks have their internet banking facility. They have internet banking facility. So business need not go and update the passbook. As and when they want, they can go and download the statement from internet, from bank portal. They can open their account in the internet portal and they can extract that statement. So now bank statement, extracting the bank statements has become very easy. You don't require to go to bank. You can sit at home or you can sit at your business and you can extract. But these are all very important. You need to understand what is passbook. Passbook is nothing but our business account in bank accounts. In other words, passbook is nothing but the reflection of our account in banker books. I'll repeat again. Passbook is nothing but the reflection of our account in banker books. Reflection of our account in banker books is nothing but passbook. Passbook, whenever I talk about passbook, you should understand this is a business account. Whenever I talk about cash book, you should always think that cash book bank column. If I am not talking about, if I am specifically talking about cash column, that has to be specified in the problem, saying that I posted this instead of posting in bank column, I posted in cash column. That is a mistake, error. Otherwise, that has to be posted in the bank column. So whenever we transact with the banker, those transactions have to be recorded in cash book under bank column in business books. Banker books, banker maintains our business account and they record all those transactions in our account. What is passbook? Passbook is nothing but the reflection of our account in banker books. Clear? Right. Now, how this passbook reflects? Passbook simple. Here there is a date, particulars. If at all any check numbers are deposited or issued to the suppliers, those check numbers will be mentioned here. Whatever amount we withdraw, that will be debit. You remember I told you debit side payments and credit side receipts in passbook, right? Similarly, you see here, debit side is withdrawals. Withdrawal is nothing but payments. And credit side is receipts. Deposits is nothing but your receipts. So deposits and what is your closing balance. This is how the format of the passbook looks like. You can withdraw the statement of account from the internet portal as well. You can go to bank portal, extract that bank statement. You will get in the similar fashion. So I hope you are clear now how business maintains their books, how banker maintains their books. Right. Fine. Well and good. Now you know you have 3-column cash book, bank columns, and you have passbook. Passbook is what? Reflection of your account in the banker books. So this is from business point of view. This is from banker's point of view. Clear? Now they keep transacting between these two, and transactions will be recorded in 3-columnar cash book under bank column, and transactions recorded by the banker in passbook. These keep happening on daily basis. What will happen? All the business organizations, what they do, at least once in a month, minimum once in a month, or once in a week, or once in a fortnight. There are companies, they do reconciliation on daily basis as well. So what they do, they compare these two books. Who will compare? Banker will not compare. We will compare. We in the sense who? Our business people will compare. What our businessman does is he will take, he has his 3-columnar cash book with him. So he will take that 3-columnar cash book and he will take this passbook. Either he extracts it or he go to bank and get it, or he will go and update the book. Whatever be the way, he will get that passbook updated. And what he will do is he will compare the closing balances of 3-columnar cash book and closing balance of passbook. Closing balance when? Maybe weekly ones or fortnightly ones or monthly ones. Whenever he feels like comparing that day balance, he will compare between both the books. As long as these two are matching, you don't have any concerns. As long as these two balances are matching, you don't have any concerns. Because your 3-columnar cash book bank column is having the same balance and passbook also is having the same balance. So balances are matching. So as long as balances are matching between these two books, you don't require bank reconciliation at all. The problem comes in whenever you find the differences between these two balances. Always you see the differences there. Very, very rare occasions you see both the balances are being matched. So whenever you compare these two balances, there will be a difference. You will definitely identify some difference. As and when you identify the difference between these two balances, you need to investigate and identify reasons for the difference. What you are supposed to do? As and when you see the difference between these two balances, you need to do the investigation. Why the difference is coming? These two should tally, no, this is I'm maintaining bank account and the banker is maintaining my account. Both should tally. Why these two are not tallying? If they are not tallying, what is your responsibility? your responsibility to investigate and identify the reasons for the difference. So when you start investigating and identifying the reasons for the difference, that process is called reconciliation. What do you mean by reconciliation? Reconciliation is the process of identifying the differences between passbook and cash book. That's all. What do you mean by reconciliation? Reconciliation is a process of identifying the differences between passbook and cash book. Simple. So that process is called reconciliation. What reconciliation you are doing? Bank reconciliation. That is the reason you are calling it as a bank reconciliation. Why are you calling this as a bank reconciliation? You are doing the reconciliation. You are doing the investigation. Why you are doing investigation? Because there is a difference between a cash book and a passbook. Since there is a difference between these two books, you are expected to do the investigation and identify the reasons for the difference. That process is called reconciliation. This process, you are doing it between your books and banker books. So that process is called bank reconciliation. Beautiful. Start thinking like this. Why we are calling it as a bank reconciliation? Because you identified the difference between your books and banker books. If you are doing some other reconciliation, general ledger reconciliation, accruals, there is a difference. Then accrual, you call it as accrual reconciliation. You call it as a liabilities reconciliation. You call it as an asset reconciliation. But here, what reconciliation you call? You call it as a bank reconciliation. Why? Because you are identifying or investigating the differences between your books and banker books. Hence, that process is called bank reconciliation. Now, why those differences are coming? You need to do the investigation. Now, you did the you did investigation, identified the reasons. It doesn't mean that your job is over there. Once you identify the reasons, you need to prepare a statement. You need to prepare a statement which shows why there is a difference between your cash book balance and your bank book balance, so your cash book balance and your passbook balance, and you give all those reasons here. That statement is called bank reconciliation statement. What do you mean by bank reconciliation statement? The statement. What do you mean by bank reconciliation statement? The statement which gives the reasons for the differences between cash book balance and your bank passbook balance is called bank reconciliation statement. You are preparing a statement explaining to your banker or explaining to your business people, your stakeholders, saying that was I did the investigation and I identified the reasons for the difference between my passbook balance and the cash book balance. You prepare a statement by giving all the reasons and you will submit to your business owner or stakeholders, whoever it may be, right? That statement is called bank reconciliation statement. Why are you calling it as bank reconciliation statement? I did the investigation, identified the reasons between passbook balance and cash book balance, and these are the reasons I drafted in a statement. That statement is called bank reconciliation statement. Are you getting my point? What do you mean by bank reconciliation statement? Tomorrow one can ask you. Bank reconciliation statement is nothing but a statement which gives me the reasons for the differences between my cash book balance and passbook balance. That's all. Another important point. When are you preparing the statement? At the time of doing the investigation or after completing the investigation, after identifying the reasons, you prepare the statement, right? So here, what you need to keep in mind is on which date you are comparing these two balances to understand the differences. Let us say you are doing this comparison on 31st January 2023. You are comparing this difference, the balances between cash book and passbook on 31st January 2023. That is the date you went to bank and took their statement. You also took your cash book, passbook, and you started comparing on 31st January 2023. The date on which the comparison happened between cash book balance and passbook balance is called reconciliation date. What do you mean by reconciliation date? Reconciliation date is nothing but the date on which the comparison happened between cash book balance and passbook balance is called reconciliation date. The date on which the comparison happened. That means what? This is the date you took the passbook balance, because till 31st January, whatever transactions recorded in bank, you took that statement. Till 31st January 2023, whatever transactions posted in our cash book balance, you took that statement. That means both the books are showing transactions till 31st January 2023. Cash book is also having transactions till 31st January. Passbook also is having transactions till 31st January 2023. So now you are comparing between cash book balance and passbook balance of having transactions till 31st January 2023. So when somebody asks you a question saying that at what date you are comparing these two, you should say, boss, I'm comparing these two balances on 31st January 2023. This is an example. You can say February 28th or March 31st, whatever be the date you are taking and comparing these two balances. The date is called reconciliation date. The date is called reconciliation date. Guys, be very, very careful here. What do you mean by reconciliation date? One can ask you. What do you mean by bank reconciliation statement? One can ask you. What do you mean by reconciliation? Why you are calling it as a bank reconciliation? Why are you calling this as a bank reconciliation statement? All these questions are being answered now. I already answered. So you know now what is the reconciliation date. You know now what is reconciliation. You know what is bank reconciliation statement. You know what is passbook. Right? So these are all very important for you to understand. Next one. What is the importance of bank reconciliation statement? Why I need to prepare bank reconciliation statement? See, every month or fortnightly or weekly basis, you need to compare your cash book balance. Whenever I say cash book balance, cash book, 3-columnar cash book with bank column. You should never forget this. Whenever I say passbook, passbook is nothing but business account and banker books. So whenever you are comparing between cash book balance and passbook balance, you will definitely see the differences in balances. Maybe because of so many errors. The difference is happening because of so many errors, right? Those errors have to be compared, identified, right? Those errors have to be rectified, right? So that you need to keep one important point, in mind here. Mere preparation of the bank's reconciliation statement is not going to resolve the purpose. What bank reconciliation statement says? Bank reconciliation statement says, yeah, these are the differences I identified. You can't go to your manager and say, yeah, I've done my bank reconciliation, sir. See, this is the bank reconciliation. Yeah, that is the bank reconciliation statement. Agreed. But what is your next job? You need to start working on those errors. You need to rectify them, ensure that those balances are matching. That is important. Mere preparation of the bank reconciliation statement is not going to solve the purpose. What you are supposed to do is, once you identify the errors, as an accountant, you are expected to resolve those differences. Post rectification entries, ensure that your passbook balance and cash book balance is matching. Otherwise, what will happen? You continue to showcase your errors in the books. Some of the errors might lead to fraud as well. Some of the errors might lead to frauds also. Who knows about it? It can lead to misappropriation of the cash. And it will not give you the true picture of your bank balance, your fund balance. Your bank will be showing some balance and your cash book balance will be showing some other balance. Which is right? Is your bank balance right? Or is your cash book balance is right? How do you get to know? How do you confirm to the auditors? How do you confirm to the stakeholders? How do you confirm to the shareholders? How do you prepare your annual report without even knowing what is your bank balance, finalized balance? So there could be misappropriation of the cash would have happened between because of the differences, or there could be a fraud happened because of the differences, or there could be you will not be disclosing the true picture of your bank balance. So anything can happen, right? So if you don't prepare the bank reconciliation statement, you are going to end up with all these problems. It can lead to fraud, it can lead to misappropriation, it can lead to incorrect picture to the stakeholders, right? So anything can happen. That is the reason why you are expected to prepare the bank reconciliation statement at least monthly once and ensure that your passbook balance and your cash book balances are matching. And if at all you identify any differences, those differences have to be kept in a statement. That statement is called bank reconciliation statement. And once the statement is prepared, as an accountant, you are expected to resolve or post those rectification entries. When I say resolve, if there is a problem with the banker, you need to go to the banker and say, boss, you did a mistake. Please rectify it. Or if there is any mistake in our books, you are an accountant, right? You need to rectify your books. So if there is a problem in the banker, you need to go to the banker and rectify it. If there is a problem at your end, you need to rectify your problem at your end. Ensure that all rectifications have been done and your bank balance, I mean to say passbook balance and cash book balance is matching. If you don't do that, it will lead to all these problems, whatever I explained to you. It might lead to fraud, misappropriation, anything. Are you clear? So this is the importance of bank reconciliation statement. So in this video, we understood what do you mean by passbook, what do you mean by bank reconciliation statement, what do you mean by reconciliation, what do you mean by reconciliation date, and what is the importance of bank reconciliation statement. I hope you are clear on this concept. Yes, if you have any doubts, you are you can feel free to comment on my video. I will definitely clarify your doubts. Right? If you like the content, please like the video, subscribe to my channel, and share this video with your friends and colleagues. Thank you so much.